Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot. But before we start talking about our income idea, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. Investing comes with risk. To read more about it, please see the description below. Finding a company with a reliable, high dividend is great. It's even better if it increases the payout on a regular basis. Today's income pick: FS KKR Capital Corp, traded on New York Stock Exchange under symbol FSK, takes it one step further. This business development company has been increasing its base distribution from 61 cents per share to 64 cents per share and expects its quarterly supplemental distribution to be a minimum of 6 cents through 2023 and possible longer. This lifts its quarterly payout to about 70 cents per share. John, if you want to explain a little bit more.
Yeah, thanks. Not only that, in May, it declared a special distribution totaling 15 cents per share, which will be paid in 3 equal installments over the remainder of the year. Management is equally excited about the future and believes its conservative, structured balance sheet and defensively positioned portfolio will allow it to continue to deliver strong results.
And why is that?
Well, right now, the company believes that the Federal Reserve's recent interest rate hikes will have a positive effect on its net investment income, as approximately 89% of its debt investments are floating rate structures, which is great. This is why it was able to increase its quarterly distribution base and provide strong guidance, which should be music to the ears of every income investor.
What can you tell us about FS KKR Corp? What do they do? I mentioned that they are a business development company. What kind of loans or investments do they make?
Well, yeah, for the first quarter ended March 31st, FS KKR Capital is as you said, BDC. It provides credit solutions to private middle market U.S. companies with annual revenues of between 10 million to 2.5 billion, an annual EBITDA of 50 million to 100 million. So those aren't exactly small companies. It invests primarily in the senior secured debt market and to a lesser extent, the subordinate debt of private middle market U.S. companies. Now, it purchases interest in loans through secondary market transactions or directly from the target companies as primary market investments. It also seeks to invest in first lien senior secured loans, second lien secured loans, and to a lesser extent, subordinated loans or mezzanine loans. Now, it's important to know the difference, what all the different loans mean. A BDC with a lot of senior debt stands first in line to get money paid, while mezzanine lenders get paid second. Meanwhile, preferred and equity investors usually receive only a fraction of the original investment in the event of a bankruptcy. So for FS KKR, the majority of their portfolio, 69%, are with secured senior loans and senior secured debt. Now, to be even a little bit safer, the fund does not invest in startup companies, turnaround situations, or companies with speculative business plans.
And John, I was reading on incomeinvestors.com that it reported solid first quarter 2023 results. Could you explain a little bit on how the financials look?
Yeah, absolutely. For the first quarter ended March 31st, the company announced net investment income. It inched up to 81 cents per share. That's up slightly from 80 cents per share in the fourth quarter of 2022. Some other metrics: adjusted net investment income was down slightly at 78 cents per share versus 81 cents per share in the fourth quarter. Net asset value, on the other hand, came in at 24.93 per share compared to 24.89 per share December 31st, 2022, and reported earnings per share, or EPS, of 71%. Which is a big increase over the 24 cents per share in the fourth quarter of 2022.
And John, we talked about this earlier as well. It declared second quarter distribution of 70 cents and a special distribution of 15 cents. How are the distributions looking here?
Yeah, you're correct. Thanks to strong quarterly results and the overall strength of its portfolio, the company's board declared a second quarter cash distribution of 70 cents per share. This includes, as we mentioned before, a base dividend of 64 cents and a supplemental distribution of 6 cents per share for a total of 70 cents or a yield of 13.95. And back in February, as again, we mentioned, it actually increased its base distribution to 64 cents from 61. And now this quarter, in the second quarter, it also declared a special cash distribution of 15 cents per share. And that was paid out, or is going to be in the process of being paid out in 3 equal installments by the end of 2023. The first 5 cents per share was distributed in May 31st, the second on August 30th, the third 5 cent per share special distribution would be paid on, I believe, November 29th to stockholders of record as of the close of business on November 15th. So there's still plenty of time for people to do their due diligence and find out more and take advantage of that if they want. Now, with the additional 15-cent special distribution, the company's annual dividend yield grows to something like 15.5%.
And how have the FSK stock performed recently?
Well, perhaps not surprisingly, free money and robust guidance has helped juice FSK stock, which is currently up 5.5%-ish over the last month, 12% over the last 3 months, about a whopping 25% year to date, and 8.5% year over year. The outlook for this, cash machine looks pretty solid over the next year. Even conservative Wall Street analysts believe FSK stock can rally anywhere from $21 per share to $24 per share. Both targets would put FSK stock well above its all-time record high of $20.43 per share.
Thank you, John, for your analysis. Just to recap, FS KKR Capital Corp is a BDC company with a diversified portfolio with 69% of its investments covered by senior secured debt and 89% of debt investments are floating rate. This, of course, has helped it throw off some pretty strong quarterly numbers, especially in the rate-sensitive environment we're currently in. The company reported its first quarter results recently, and it has increased its base payout to 64 cents per share and expected its quarterly supplemental distribution to be at least 6 cents for the foreseeable future. So for now, this pegs its quarterly dividend of a minimum of 70 cents per share. That's it for today. We'll be back with another video soon. If you want to read more about John's income ideas, you could head directly to www.incomeinvestors.com. We'll be back with another video soon. Stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.